Okay, let's roll on oil. Gerald's got this. I'm going to roll this on oil for you so you understand how to do this. All right, so what we're doing is the first thing you log into the trading room. Here's crude oil this morning. You just have to trade this from 7:45 to 10:45 Eastern. You don't need to trade this around the clock. Some traders are in here early, which is great because the setups still work early hours in the morning. We have the room open 23 out of 24 hours a day. Some traders even like watching the market open up at 6 p.m. Eastern Standard Time and trading all the way to 9 o'clock. You still get some good setups. Then also, but the main core setups that I think you only need to trade is from 7:45 to 10:45. This is where the volume starts stepping into the market before the pit opens. Once the pit opens up at 9 a.m., we have the opening range trade, which I teach you traders to trade with the 5-minute trend. All members should have that indicator on their own charts. We'll do the opening range trade at 9 and then trade it to 10:45. Then after 10:45, you need to stop looking for just trend trades. The counter trades step into the market because a lot of volume, a lot of these hedge funds, banks, institutional traders will jockey their positions from the morning trades, and then the counters work also with trend. But during 7:45 to 10:45 that's all you need to trade because all you do is take trend trades. That's all we do. This allows you not to be a counter trend trader, which is why 90 to almost 99% get wiped out. In fact, I just got an article from one of my members in the room that says almost 99% get wiped out in this market, in these markets. The reason being a lot of it is counter trend trading. So we're not counter trend traders from 7:45 to 10:45. We are trend traders on the retracement snapbacks, or we're breakout traders at HV and LVA on a number 2 setup. So all we're doing is we look at this 5-minute chart. That's the first thing we look at. Grab a cup of coffee, grab some tea, smoke a cigar like Gerald, whatever you got to do, right? Get motivated to watch for these setups, right? And then what we're going to do is we're going to look for that magenta moving average. And if that magenta moving average is angled, that's our dominant moving average. I don't care about any of these charts. I care about that moving average right there because that's going to let me to know my bias for the morning. Once I know my bias, I can go to work. My bias is up this morning. If I log in here at 7:45, my bias is up. My dominant moving average is on the upside, angled up. My white moving average, my smaller non-dominant moving average is crossed up with spread. Spread equals bread, okay? So we're spread. We want to buy the dip. So what do? The first order of business in uptrend is this. Let me mark it down. Here we go. Uptrend, number 1 buy. Buy first test of LVA. So what we're going to do is we're going to buy the first test of LVA. If you're a new member in the trading room, you just focus right there on this trade and that's it. No other trades. Just do this trade the next month if you want to. That's it. No other trade setups. Don't worry about the roller setups. Don't worry about my previous high, previous low day setups. Don't worry about anything else. You don't have to worry about even the number 2 breakout trade. This retracement trade is all you need to concentrate on if you want to find early success in this room. Why? Why does this work so well? Why do we see consistency all in 2012? Same old setup. Why have we seen consistency all week on the number 1 trade? How can we get consistency with this number 1 trade? Why does it work? Because what I'm looking at is these 2 5-minute charts. If I know I'm in an uptrend, my focus is on these 5-minute charts. You master my 2 5-minute charts, you just mastered my methodology. You mastered my trading plan. Because this ninja chart is an execution chart. That's what we look at when we reach my level. We don't care about looking at that until we get to these levels over here on the 5-minute chart. And the one most important level you need to concentrate on a number 1 trade are these green dots at the bottom left and these red dots at the bottom left. Okay? Or these red dots on my trend chart or these green dots on my trend chart. That's the only 2 things you need to concentrate yourself on a number 1 setup. Because consistently, every single day, it happened. Yesterday, it stopped at the exact tick once. Day before, it happened to the exact tick on gold once. Sometimes it'll stop it to the exact tick. So what we need to do is we need to recognize that it can stop within 2 or 3 ticks of it. It can stop right on it, or and go below it 2 or 3 ticks. As long as it gets right into that area, then we look to qualify it on the 89 tick to enter. So if we're in an uptrend, we buy green. If we're in a downtrend, we sell red. That's simple. There's your number 1 trade. Nothing else to learn. That's it. Why does it work? Because what happens is is that if you look at the bottom left chart where I marked number 1, this lets you know where the possible resting orders are. So you get all these resting orders at 62. It also lets you know where the stop orders are just below it, because you have heavy stop orders just below LVA and heavy stop orders just above HVA, because HV and LVA should always contain price. But once that price is violated, then you get a hard push to the upside or downside because stops are taken out. So what I understand and what I understood in developing the system is that I understood that I want to buy where all the resting buy orders are, or where the stop levels are, just above the stop levels. I want to be a buyer there because it will repel price. So what I've done is I understood that if I'm in an uptrend, I want to buy the first test of LVA. So when I come down to LVA at 62, I don't even think twice about it. I look to qualify the trade. So I either buy 22 or I buy 62. I only got 2 buy spots for a number 1 trade this morning. That's it. I buy 62, I buy 22. So what I'm going to do is when I come down, I qualify it by my Ninja chart. And here's a beautiful technique that I always teach you how to use. It works great on gold too. I look for big bars, big long bars coming into my setup, because that tells me there's an exhaustion point in the market. And when you get an exhaustion point in the market, you get a rebound in the market, an immediate gratification that you get after you get into the market. And what you see is this: big long bar, big long bar. This is coming to an exhaustion, big long bar. Then I want you to look for 3 candlesticks. Here they are. Every day it works like this. 80-85% is going to be these two: a doji, spinning top. 80-85% should be those 2 candlesticks, and then a hammer. Okay, now I categorize a hammer. I know it's called different on the upside and downside, but we call both of them a hammer right there. So those are the 3 candlesticks we look for. Why? Because I want to see those big bars come in. I want to see those big bars come in, showing their exhaustion point, and then I want to see an indecision bar. I want to see an indecision in buyers and sellers. If I know I'm in an uptrend, the market is counter-trend trading itself, is catching all the weak traders, all the novice traders, is catching all the wrongly positioned traders. Those are the big bars. These are all the wrongly positioned traders. Okay? And then it shows an indecision bar. This is a bar that tells me that we have equal buyers versus sellers. That lets me know, get ready for the green reversal bar. Then we need demand to come in the market. I need to see demand. Demand will be a close of the first green bar. Consequently, at the same time, you want to see a higher low on my oscillator below. That tells you we have less supply. This market is a supply-controlled market. If we have less supply, the market rebounds. Then we're in after the close. Our hard stop is 13 to 15 ticks. You don't need more than 15 tick hard stop in the room. Our first scale is either an automated on your automated dome that Gerald helps you set up, or you can set up. And then your scale targets are my symmetry dots. Now here's the cool thing, my methodology. I teach you to scale, if you haven't scaled at the first set of symmetry here. But check this out. Look how you can time these trades. Watch this. Happens all the time, like this. The second set of symmetry dots. The first set is definitely a scale. If you haven't scaled already, those red dots. The second set, you bail 75% of your position. 75%. Okay, if you're doing 4 contracts, you're off of 3 contracts right here. Why? Because I want to not let a winner turn into a loser. 75% off right at the second set of symmetry. Then you can let your last runner go where? 96.50, all the way up here. Let that last runner try to get all the way up to 96.50. Can't put on my chart right there, but all the way up, 50 more ticks. Let that one contract run all the way to 96.50 if it wants. Try to get yourself a 100-tick trade, a $1,000 trade on one contract. That's how you make money in the room. That's how 2-3 your members in the room consistently make it. They scale, they take 75% off on the second set, and they let that puppy run. Now, another setup to have in the room before I turn this off, Gerald, is what? What trade is this right here, members, right here? What trade is that I taught you yesterday for some of you new trials too? What is this? Retest the previous high day with what though? With what? Previous high day with what? With trend. 5-minute trend is up. I teach you this pattern. Very simple pattern. We've seen hundreds of trades like this. You go up. We just did one yesterday in the room also. You retrace to the previous high day. Do we have the beautiful, gorgeous, beautiful spinning top that I adore and love that happens 85% of the time, right? There it is. Imagine that. Do we have beautiful less supply right on the retest? Imagine that. There it is. Bam. Lower high or higher low, less supply. There's your spinning top. There's your reversal bar. There you go. My point is, guys and gals, this is a rule-based system. All we got to do is trade the rules. That's it.